Banks celebrate when your credit score hits 800. They send you congratulations emails. They upgrade your card. They call you a valued customer. But here is what they are not telling you. That perfect score you worked years to build is not a reward. It is bait. And the moment you use it, the trap closes. Every month, 71 million Americans with excellent credit scores believe they are winning the financial game. They get approved for everything: lower interest rates, higher limits, premium cards with travel perks. It feels like success. It feels like the system finally recognizing your discipline. But that feeling is the product. Your good credit score does not protect you from the system. It makes you more profitable to it. Because banks do not make money from people who cannot borrow. They make money from people who can borrow responsibly, consistently, and forever. Someone with a 550 credit score gets rejected or pays 24% interest on a small limit. The bank makes some money, but the relationship ends fast. Someone with an 810 credit score gets approved for a $30,000 limit at 18% interest. They carry a balance of $8,000. They pay on time every month, they never miss, and they stay in debt for years. That is a customer worth $40,000 in interest over a decade. You are not escaping the system with a good credit score. You are becoming the ideal customer. This is not about punishing financial responsibility. This is about understanding what the score actually measures. Your credit score does not measure wealth. It does not measure financial security. It measures how reliably you make banks money. It is a profitability rating. The better your score, the more debt you can carry. The more debt you can carry, the longer you stay profitable. And the longer you stay profitable, the more the system is designed to keep you borrowing. Here's how the psychological trap works. You spend years building your credit score. You pay every bill on time. You keep your balances low. You monitor it obsessively. Then one day you hit 780. You feel accomplished. You feel trusted. And that is when the offers flood in. Pre-approved credit lines, 0% balance transfers for 18 months, rewards cards with 5% cash back. Every offer is framed as a benefit, a tool, a reward for your responsibility. But every offer is also an invitation to carry more debt. And because your score is high, you feel safe taking it. You transfer a balance to save on interest. You open a new card for the sign-up bonus. You finance a card 4% instead of paying cash because the rate is so low. Every decision feels smart in isolation, but together they create something the bank planned from the beginning. A customer with excellent credit who is now managing $40,000 in total debt across 4 accounts, paying on time every month, never defaulting, and generating $6,000 a year in interest. You are not failing. You are performing exactly as designed. The system does not want you to default. It wants you to succeed at staying in debt. And the proof is in how the industry talks about you. Internally, banks call high credit score customers revolvers, not because you are spinning out of control, because you revolve a balance. You borrow, you pay the minimum or slightly more, and you stay in the cycle. You are profitable, predictable, and permanent. The average American with a credit score above 750 carries $8,400 in credit card debt. They pay it down slowly. They never miss a payment, and they stay in debt for an average of 7 years. That is not failure. That is the business model. Now, here is where it gets more disturbing. The credit score system is designed to make you feel like debt is progress. Every time you take on a new loan and pay it responsibly, your score goes up. Every time you increase your available credit and keep your utilization low, your score goes up. The system rewards you for borrowing. It punishes you for staying out of the game. If you pay off all your credit cards and stop using credit entirely, your score does not go up. It goes down because you are no longer generating data. You are no longer profitable. The score is not measuring your financial health. It is measuring your value to lenders. And the more valuable you are, the more you are worth keeping in the system. This is why people with perfect credit scores still feel financially stressed. They are doing everything right according to the score. But the score was never designed to set them free. It was designed to keep them borrowing. So what do? You do not abandon credit. You use it deliberately. You recognize that the score is a tool, not a goal. You borrow only when the math works in your favor, not because you got pre-approved. You pay off balances in full whenever possible. You reject offers that benefit the bank more than you. And you stop measuring financial success by a number designed to measure your profitability to someone else. The system will keep celebrating your high score, but you need to ask yourself, who is that celebration really for? Because the moment you realize your credit score is not a measure of freedom, but a measure of how profitable you are to the system, everything changes. You stop chasing the score. You start chasing actual wealth. And that is something no credit bureau can measure. This is not financial advice. Always consult a qualified financial professional before making any investment decisions.